Welcome back to Buy Trigger Family Investment. My name is Alex Koh. Today on Thursday, lunchtime UK, to speak about two key earnings. Really, one is Apple and then Tesla stock. I believe Apple's down 4.5% after hours. Tesla is down about 5.6%. And again, anything can happen when the market opens. But today we're going to discuss about the key facts that we have found from the earnings and then hopefully give you guys a bit more insight, not just what you read on CNBC and Bloomberg, but what I think and I've checked and I've looked at regarding these two stocks, Google and Tesla. So if you guys own these stocks, leave a comment below if you own Google or Tesla and if anything that you want to know a bit more. Okay, so since you all are here already, let's get kicking. Okay, so looking through here, so in high level context, Google's earnings on paper looks clean. Tick, growth, search engine, TPU, AI infrastructure, everything tick great. I know they missed slightly on the EPS and they got a negative cash flow happening just now. And that's what people think, oh, that's why we got to short Tesla, we got to sell Tesla. No, Google stocks. Apologies for that. So when we look at the numbers, Google created a return on capital debate. Tesla created a profit conversion debate. So that's where we want to really cover. So first and foremost, Google's EPS was reported of 9.11. But 6.26 per share came from investment become more valuable on paper because Google is invested in different various firms, yeah, including SpaceX. And then 9.11 EPS minus 6.26 equals to 2.85. That's where it came from, 2.85. And the target was like 2.95 something. So it looks like they missed. Okay. And then there was a concern saying, oh, wait, the other investments are more valuable than their own revenue. So what's happened? But you need to think, if you were the CEO of Google, you want to be reinvesting in infrastructure, you want to balance your balance sheet. So your external investment seems to off-take it nicely, but you really want to invest in compute. That's what really Google is doing. So EPS excluding the disclosure equity securities gain. So I think it's just a balancing act. But the whole thing that during the forum, the other analyst was asking Sundar Pichai, the CEO of Google, is saying, how are you going to keep up the positive net flow? How are you going to keep up the EPS for Google? That was the question that was being asked. But let's go to the Google's negative free cash flow just now, because that's what's been talked about. That's what people are hammering on the news, saying that's why Google stocks drop. But no, that's not the reason why. There are many other reasons, but let's talk about the negative cash flow. So Google's operation generated 39.1 billion, okay? It spent 44.9 billion on properties and equipment, AI infrastructure. So 39.1 minus 44.9 of infrastructure leaves a negative of 5.9 billion free cash flow. So think about it. They made 39.1 billion, almost 40 billion they made from their general operations. So if they decide to not do any AI infrastructure investment, Google made 40 billion this quarter, which is great. But because they need to spend and also spend on the research TPU, spend on the GPU from AMD and NVIDIA, they have to spend. That's what the capacity of CapEx is just now. So this is just a balancing act for Google. So funny enough, the search and cloud is still up. Okay. And before we go about the search and cloud, which could be a problem for Google, let's talk about the TPU again. As you all know, the TPU for Google, it's a rival to the Blackwell of NVIDIA. It's like the GPU, but alternative for more inference rather than a graphics processing unit. So the TPU is a great one. So they've been showing a lot of revenue coming from the TPU rental, meaning they're offloading the TPU. But one thing they never disclose is the margin, or how much I'm making from the TPU rental in comparison to the likes of CoreWeave, Nibis, Iron. That's what we're all interested in. So they never really genuinely show that. But semi-analysis, one of the great influencers out there, are saying that this is growing. This Alphabet never disclosed it, but this is a genuine growth for them. Could this be the new growth total addressable market for Google, competing with all the rental market? So the economics matter, the numbers matter, but they're not disclosing any of the TPU only revenue or profit or margin. So TPU can be an excellent business with every dollar reported but the cloud profit reported doesn't show that. So that's what people are very, very excited about. But then watching, I'm not going to take credit for it, but take him, the guy who wrote this book here, The NVIDIA is the Way. I don't know if you know, take him, follow him. He's really good. I like him. Very, very analytical. So one thing for Google, if you're Google shareholders, you need to know this. So Google's main business is about search engine ads. And you all know AI will kill search engine ads. So that's why Google declined initially at 25 and beginning of 26 before they jumped up and before Warren Buffett came in. Google was sideways for quite a while because of the scare saying, oh, AI is going to kill Google. And then when Buffett entered the market and the whole TPU game came along, it seems like Gemini really brought in new users. That's what Google was booming, okay? New users better than Copilot. Copilot did it for 2 years. The user growth just stagnate. But Google went boom. Gemini users were increasing, blah, blah, blah. Affordable. And now the question comes back by Takim saying that, is this whole AI business going to kill the Google search business? Okay. Of course, if you're a Google shareholder, you wish, no, Google's going to have to. But one thing that you really need to think about on Google's landscape here, Google is renting the TPU. Google is making money like what semi-analysis is renting of GPU. Okay, come get my GPU. But one thing that Google's strength in the whole AI is its DeepMind, the DeepMind department. That's what's belonged to Google. It's more far superior than Apple Intelligence. The DeepMind has been there for a long, long time. It can be with quantum, it can be anything, but DeepMind. So if Google is renting a lot of its TPU away, I don't even know the percentage. That's what I want to know. How much are they renting off to people? Are they going to lose business on their own DeepMind? Are they giving away, basically, are they giving away compute to make money and forget about their own core business of DeepMind? That is what is concerned. If you're a Google shareholder, that's what you need to think. But on paper, if you're Warren Buffett and stuff, then of course you go, it's making money, it's great. And that's where we are. We just have to dollar cost average over time. But the long-term business in terms of the technology itself, where finance people don't see yet, how long is it sustainable? Are they trying to kill their own business by renting out TPU? Is that their long-term business? Or are they trying to do half and half? How are they balancing that act? That is the real question we want to ask for Google. So Google, why it dropped? It's a negative cash flow and some details are not in it. And also I think Google just dropped because their value trigger for me is a 307, buy trigger is 345. So the coming drop this back down is, I'm not too surprised. It's just being a bit more a bit of reset for them. And also, if you check the technical analysis, Google is actually coming close to a death cross. Not yet. I'm not alarming. Maybe if they do go down this downward trend and nobody buys it back up, it might go into a death cross and you might see a reset. And the other thing about Google is, for me personally, I have actually sold Google at 350, 355 average for the last few weeks to take profit because I see more upside for Meta and Microsoft. That's my own personal view. It doesn't mean that you guys have to follow me. It's my own personal view because I've ride Google quite a while and I felt that it's coming to stagnate. And then therefore, that's why I swapped. This is my own personal opinion. Okay, next one. The next one up that I really want to speak about is the Tesla. Okay, so Tesla dropped 6%. And then we're here sitting thinking, what's going on with Tesla? It's really about the cash flow, the margins. That's why it's dropping. So I'm not a Tesla shareholder, but will I be worried about Tesla? So I guess it's two things. Tesla shareholders are investing for the long-term game, for the robotaxis, for their robots, for Tesla AI and many more. And Tesla long-term investors know that every money that comes in are being reinvested into the other departments. So the question about Tesla's EPS just now, if you realize that Tesla's EPS is 32 cents and Tesla's investment in SpaceX actually earning 22 cents. So Tesla actually made only 10 cents on EPS this year. So Tesla's investment in SpaceX is making them more money on their Tesla selling cars. So it seems like Tesla is giving away its cars. Like, I made one car for 30 grand, I'm selling for 30 grand. So that's where Tesla's earnings is looking like. I mean, there's been growth in the software department, like the FSD, the subscription business. Those areas have been growing. But it looks like a lot of money has gone into R&D, SG&A business. So left only 398 million for operating income. And also the gross margin dropped to 16.3. Believe the gross margin before was 21%. So it's dropped. Energy gross margin fell as well. So the overall net profit is about 1%. So for every 100 billion made, let's say for a year, only 1 billion is net profit. Like 99 billion has been burned away. So that's where Tesla is. So any short-term Tesla investors will be selling, but long-term Tesla believe that in the economy of robot, AI, and taxis will be holding on, I hope, if you're a Tesla investors. So, but the thing that's not clear is how is Tesla using the vehicle money to fund other projects? I'm looking here, trying to see the disclosure, the separation between robotaxi, cybercab, Optimus, AI compute, Terafab, automotive, battery energy, solar manufacturing. Tesla does not disclose how many dollars went to each program. We can see the total bill, but we cannot see the project level receipts. Okay, that's where it's really that's what people want to know. Okay, if especially long-term Tesla investors, solving autonomy does not mean Tesla owns the market and install capacity in the same profitable network. Remember, Tesla is getting competition from other BYD and also Huawei and all the other Chinese firms as well, and also Tesla supporting BMW and Mercedes with their AI chip. So this is a concern, but obviously Elon is not going to care. Elon's going to see the whole network distribution scaling growth. That's where we are. And do you want to hear about ARK Invest upside case? I mean, as an investor, it's nice to hear about upside case, but I will skip the whole ARK Invest case for now because they always sell the dream. They always have been, but Tesla investors have been held back for the last 3-4 years. So I don't want to sell too much bullish, but at the moment, as it stands on paper, Tesla's making money. Money's going out everywhere else. Their investment in SpaceX have saved them. If it wasn't for SpaceX, they'll be at minus 1.0, minus 10 cents of EPS, meaning they've made completely lost. So that's where Tesla is. Okay, I hope you guys found it useful. If you're Google investors, everybody's different. Google's spreadsheet profit and loss looks very, very, very healthy. Growth is intact. But as Google investors, long term, always be skeptical. Think about the Google search engine. It will be disrupted. It's still growing. How are they going to replace them? With DeepMind, owned by Google. How are they holding capacity for DeepMind? How are they progressing? Gemini Pro 3.6, 0.55, a bit slow down. So we really need to see if that is going to be the next big thing, Gemini over search engine, and how they're going to monetize it, and how they're going to hold if they're renting out the whole compute, or are they fully utilizing it? Is cash more important for us, or technology superiority more important? That's for Google. That's for you to answer. But for now, Google, in terms of price action, is just slightly above, and then it should value itself out soon. Okay. Tesla, a bit more concerning. Cash flow, where's the money going? What are they going to do? Long-term investors really need to look long-term. Elon brings up magical numbers. He's busy with other projects. So if it was me, I'd rather have money elsewhere than Tesla. I'd rather put my money in Micron, who's a bit more volatile, than Tesla just now. But that's for the short 18 months, of course. What happens after beyond 2028 is for us to see, because as you can see, AI is really changing the landscape so fast. Okay, hope you find this useful. I will share this write-up on Tesla and Google up on Substack in more details and numbers. And eventually, I think I'll cover GEV, Microsoft earnings is coming up, and a few others will come shortly this week. Hopefully, share that basis, reevaluate my buy trigger and see if it changes. And if they do, you'll be see on the Substack articles. Okay, folks, thank you. If you guys are watching this on rerun, thank you very much. And hope to see you next time on another live session. Okay, guys, take care. Go for your lunch. 15 minutes is up. I'll speak to you soon. Just looking, Ria's saying, any thoughts on now? Now, for me, basic fundamentals, the stock is great. The baseline oversold territory was $100 per share. Now's growth is between 20-30% by memory. Okay, 20-30%. So now don't treat now as like a hyper growth stock. Okay, now is currently at 95, 25% growth. It's a mature growth stock. So don't treat now like the next Credo or the next Micron. They're doing well. 25% growth. Value is about 116, depending on this earnings, where they're going to be. I think 146 could be on the horizon, but now it's at the consolidation phase, and they just have to see the AI growth return. Then now it's one of those consolidation phase. You don't expect to buy now and see a V rebound. It's one of those slowly creep up if they keep quarter and quarter and quarter. That's why quarterly 1, quarter 2, quarter 3, quarter 4 will be key for now. But as it stands, they are healthy. Buying Oracle on the dip. Oracle one is a bit ropey because the numbers, each earnings quarter and what reported is different. We know that Oracle is spending on the growth of their infrastructure. They're trying to join the whole cloud game. So Oracle is definitely on the dip. I'm just looking through my info here. The price of 126, the value is at 161. The growth currently is 16%. This needs to be evaluated because every time I evaluate Oracle on each quarter, it changes quite drastically. One period it goes up, one period it comes back down. So until the earnings, when I look at it, I'll evaluate the numbers, then we can have a more sustainable chat rather than trying to speculate on Oracle. So I'll put that in my note. If Oracle's earnings comes out, I'll put that because 126 on valuation 161 is attractive. And folks who bought Oracle at 250 could be really painful here. It could be half your investment just now. But same as any other who's invested in CoreWeave like me or any other new stocks. So for me, I just want to end this by saying compute is king. I can promise you compute is king. I'm not saying that everybody will be a winner, but compute is the commodity. Tokenization of compute is going to be a big thing, and it's happening in not just the big companies, but it's happening in the place that you work, the place that I work, and the place that all your other managers and people are working, the CEOs are working, or generating new intelligence through compute, new ideas through compute, new productivity through compute. And that's where we are. Okay. And hopefully I'll follow up with all the articles to cover all the base ground. Okay. Thank you guys. Have a good day. And thanks for your question. Appreciate that. Thank you. Bye-bye.